Hello, folks. This is Brandon Chapman with you today. It's a Monday video for TheoTrade. It is May 12th, 2025, and the S&P, of course, is up about 3% today with only about a half hour to go before the close. And boy, as we're watching the market kind of grind over the last few weeks, making some big moves some days and grinding other days, we reached a point, a crossroads per se in the market at around this 61% retracement line of the sell-off from February 19th to the low of April 7th. And this seemed like a very good point to kind of say, oh, you know what? This is a crossroads for the market. And in fact, if we look at SPY, we actually had a really significant print back on the 2nd of May at 565.65 that said, hey, if we stay below this, we may break down, or we break through it, it's going to act as support and could be bullish. And boy, we certainly broke through it today after really testing it 3 times last week after the print showed up back on May 2nd. And so these just singular prints of 1 million plus traded in one trade create instant relevance or significance to a price level rather than waiting for it to accumulate over time. Again, you have one trade that really shows you that, and you got the trade flash up here, which will show that kind of stuff. Anyway, so as we turn our attention to the market, what do you do about today? So we had a crossroads, and we took the bullish pathway today with this breakout. Are you happy with today's move? Well, if you're happy with it, you feel like, hey, today's P&L is significant, right? It's benefiting your portfolio by the fact that the market is moving in your direction. So if that's the case, when we talk about what's your pain trade, your pain trades to the downside because if the market turns lower, you're, of course, going to experience losses. If it goes higher, you're going to experience gains. Now, even within the bearish pain trade where you're bullish on the market, not all your positions may be playing out well today. In fact, look at GLD. Gold's down 2.79% today. I mean, that's a pretty significant sell-off, which is reflective of what? Dollar strength. And if we look at the US dollar vis-a-vis the euro, you can see significant strength materializing in the dollar today. Now, that's always the case, right? The dollar has been weak, and all of a sudden, we might see more strength emerge. Now, this is relative strength in terms of against the euro, real strength in terms of gold, but there's a paper market to gold. How leveraged is the trade in gold right now? It's hard to assess. So today's deleveraging process in gold may be more than just a dollar strength scenario. The S&P is up 3%. Well, that would say that the market's up substantially greater if the dollar's strengthening by 2.7%. My point in sharing this is saying, look, you've got to figure out, okay, where the pain exists, right? Which direction, what areas of the market are you not set up to capitalize on? And you've got to make a decision about what is the next move of the market and try to find some way to align with that. Now, this is the hard point. Is today's move setting up for a bearish result or a bullish result? Well, breaking the 61%, it says, hey, we may have a chance of retesting 6,100. The news over the weekend, suspending the additional tariffs on China. We're going to keep it at 30% for the next 3 months. No deals signed yet. Nothing's really materially changed. And what we found out over the last week is that 10% across-the-board tariff is what they're shooting for. It is not temporary, it's permanent, right? That they want to negotiate it down to 10% across the board if they can get what they want. And maybe it's 30% against China, maybe it's 80%, whatever that number is. Whatever happened and whatever the interpretation is today was a bullish result to the market. But as we found out last week, the Fed isn't on board for accommodating, right? Austin Goolsbee talked about today, we're still a long ways from rate cuts. Really? We've got CPI data this week, PPI data, lots of things that could potentially create some degree of headline risk. And who knows, maybe some of these agreements ultimately fall apart. There is tremendous amount of headline risk. And one word I take away from Powell's press conference last week when he's described their policy as restrictive. So for those that are wanting to get really long the market here, just realize that you are, in fact, fighting the Fed. And why do I say that? Well, let's look at the 10-year Treasury yield. So we'll go to TNX colon CGI, the 10-year treasury yields at 4.45%. Well, what is the 10-year in projected inflation rate according to the Fed? It's 2.3%. So we are seeing positive real rates, which is restrictive policy by the Federal Reserve. So are we now saying it's okay to fight the Federal Reserve? To fight their policy? I know that Trump said buy last week. Yes, great. We're up nicely, up 3% today. Now, what is the next move, right, in the market? Do you want to get long here, buying a significant strength over the last couple of weeks? This is why it's ultimately you got to be prepared to trade both sides of the market. Trade bullishly down here, trade bearishly up here, trade bullishly down here, trade bearishly up here. And yeah, you know what? Your bearish trades might be out of the money a little bit, but your bullish trades may finally be kicking in. And for those in ghost prints, that's exactly what's happened, right? We've taken off the table a lot of bullish trades that have had good profits. Now what? Our bearish trades are far out of the money. Could they come back? Sure they can. We got 39 days left for all of them, for the three that we have. So the point is that do you take profits here? Well, you better have a plan. If you've been long since the lows and you don't have any bearish trades on or do not have the inclination to do bearish trades, you better have plans that take profits into strength. And anytime the S&P is up 3%, you might want to consider that. And so we're kind of weighing today in ghost prints. Do we take more off? Something we rolled, we held through earnings. And of course, we're looking at the possibility of trying to roll it out to a higher strike price. But what do? Do we just take profits here? After all, gold's down and Bitcoin today is falling off and is down 1.5% as well. What is the next move of the market? If you think you know, you're wrong, because you don't. I don't know. You don't know. Trump doesn't know. China doesn't know, right? We have a tremendous amount of headline risk, and we have very little support for the market other than we can say, hey, we're making progress. Well, guess what? Progress can change quickly. Progress can change in a day. And we have a Fed that, as of right now, is being restrictive. So what should you do? Well, if we're talking about the S&P 500, we have to make the assessment. Am I wanting to get long here? I guess if you're 100% bearish and your bearish trades are still connected at this point, and when I say connected, it means what if we decline 5% in the next week? Well, what would that be? We go 58.31. We'll times that by 0.95. I'm bringing up my calculator on my phone right now. So we go 58.31 times 0.95. That's 55.39. If we get a move from the current level to 55.39, are your bearish trades about to kick in? Or are your bearish trades further out of the money? If you shorted something, if we go back to 55.31, are those shorts, which have unlimited risk to the upside, are they then profitable? Because we might go to 55.31 and then to 6,100. And so right now it's about what? You have to maintain your connectivity, meaning you probably need to take profits into strength, and you better have bearish trades on that can make money if we do pull back 5%. You'd hate to see the market pull back 5%. You put on a bunch of bullish trades in the next few days, and you lose on both sides of the trade because we pull back and then we advance. This is a very, very difficult market. So you better look for opportunities to find profit-taking opportunities into strength, because if you don't, you end up losing on your bullish trades. And guess what? You lose on your bearish trades. That is the worst position to be in as a trader, where you can't make it on either side of the market. And that's psychologically, that's really damaging. So with today's move, let's take a look at the volatility markets. The VIX made a big move today. So the VIX is down what? We're down 15% or 3 points to 18.64. Well, if we look at prior levels, we've got 17 and we've got 15, and then we got down here around 12. Is it likely we can get to 12 here? Probably not, but 15 maybe. Could we get there in a couple of days? Absolutely we could. Why is the VIX declining today though? At the end of the day, we could describe it in one word. It's called selling. They're selling options on the S&P 500 around that 30-day window, that 30-day time frame on the SPX. Well, what are they selling? Are they selling calls or are they selling puts? Here's the deal, folks. That's hard to kind of ascertain. You could try to dig in and go through all of it, but there's actually an index that will tell you. Now, unfortunately, we're not going to see that print until after the market close, probably about an hour after 30 minutes, an hour after the close today. But it's called skew. If skew goes up, it means they're buying puts and selling calls. Because the VIX is going down, they're selling more calls than they're buying puts. But what they are doing is they're hedging. They're selling calls and buying puts. It's called a strangle against a portfolio of long stocks. So if skew goes up, we know they're adding hedges, and it's the call selling that is driving the VIX down. Not exactly a bullish result. But there's a very good chance we may see skew go up, could even go up a lot with today's significant downside move. As we go back to the VIX, well, guess what? The market was kind of edging higher. The VIX was declining, and skew was declining back here. What were they doing at that point? Well, if we go back to this point where the VIX spiked to 60, they're not selling calls. They're just buying puts. And those puts are closed, and the volatility starts to come down as they're closing out hedges and selling puts. Today has all the markings of likely a hedging day where they're buying puts and selling calls. We'll just have to see the confirmation later today to get that read. So from my perspective, if we see skew pop today, it's an indication of something more bearish kind of coming to the surface here. And what that means is that we're hedging into the strength on an increasing basis. It's the hedging, the selling calls, drawing the VIX or driving the VIX lower, as opposed to really opening by selling premium. Now, there is some selling premium going on in stuff like the VXX and other kind of index ETFs like this that track the VIX. They're selling puts today, not exactly a bullish scenario for the market. They're just suggesting if we sell a 50 put, we're not expecting volatility to go down a lot from here. But from my standpoint, what I look at, I like to see what I call the 90-day rubber band. I like to look at 3-month volatility against 1-month volatility. And what we're seeing today is a decently sharp move higher. We're currently seeing that the 3-month vol is about 9.5% higher than the 30-day vol. If we see a couple more days out of this and the VIX continue to fall, let's say to 15, this could readily get back up to a level we last saw on February 14th. This creates that reset. So from my standpoint, I'm waiting and watching skew today after the close when it updates. And I want to see, because the skew's falling in this environment with the falling VIX, I've got to be prepared maybe to get more long the market, at least for the time being, and see until we start to see the VIX drop to a level where we're starting to see vol expectations pick back up, and that 3-month volatility is about 20% higher or more than the 30-day volatility. But more than likely, what it tells me is we may have to just wait. If you've got bullish trades on, like I do, my pain trades the downside because my bearish trades are further out of the money. I've got to reload to the downside and look to take the last bit of profits I have to the upside into this rally, into this market right now. And we'll see. Hopefully it doesn't turn too quickly, but I'm watching that. Gold selling off today, silver selling off today, and silver printing a pretty large print on the bearish side. If we come here to SLV and we just scroll down to today's time and sales, 10,000 puts bought at the 13 June expiration, 28 put. Are we about to see renewed dollar strength? Well, that dollar strength may eventually cause this rally to curtail as the shorts are getting squeezed, as the traders are getting long and driving things today. It then becomes crowded again to the upside, and we're waiting for those downside opportunities to start to materialize once again. That's what we're waiting for. So for me, for right now, I'm holding out. I'm looking to take profits into strength, and I'm trying to reset. So if we start to see a downside move by the end of this week into next week, I can pick up something, and into that weakness, then look to find bullish opportunities again. And if we continue to sell off, some of the stuff that's worked its way farther out of the money may have a chance to eventually kick in and create kind of that windfall opportunity. If we do see a much bigger move, maybe something on the order of 10%, not just 5%, and we're back down at the lows again. That's a very real possibility. So again, I'm giving you something to key off today. We're trying to create we're trying to create some sort of perspective on today's decline in the VIX and key off of skew to tell you what's the composition of today's decline. In this case, we might be talking call selling and put buying, and we're just selling more calls, not exactly the bullish result that we're looking for. And maybe some long puts being closed out or short puts being closed on our short calls and all this stuff going on in the backdrop here. Skew's going to help provide some degree of clarity, and then we can start to take opportunity going forward. But you better have a plan right now for taking profits into this strength, because there's a good chance we will see a pullback. You may want to find opportunities out there on the bearish side to start to add into strength here. Anyway, folks, we'll take this is the end of the video for today. We'll see you back next week. We'll see what this next week holds with some degree of headline risk. Again, inflation data could be a big thing coming up this week. We'll see if we post above expectations or below expectations. We'll see if some volatility materializes. We'll see if the VIX can get down to 15. We'll see where skew's going. Anyway, have a great one. We'll see you back next week. Thank you.